You want to listen up because today we're going to talk about why commercial property can probably be maybe the right investment for you, but it's not about finding the right commercial deal. It's about actually having the right finance strategy. And if you don't have the right finance broker, you're probably not going to get the property that you actually want to purchase as a commercial property. So today I've got Anthony from Code Finance that specializes in commercial brokering.
Yeah, owner and director of Code Finance. Created literally from my phone and laptop. That's how we started. I've been in the finance game for over 15 years. So originally I was a financial planner, and I sort of started seeing how the broker industry worked, and I found that like financial planning is great, and it taught me a lot of strategy, a lot of structure, everything like that. But I found some service levels of brokers need to be lifted. And I'll say this, in financial planning, the service levels are really high, but tech is not great. And the opposites for broking. So service levels can be sometimes low, but tech is really high. So a lot of technology. And for me, I wanted to bring a high level service with clients because it is sometimes the biggest financial decision that they're going to make, and put that bit of extra service to help them. And that's how we started Code.
Yeah.
Yeah.
You told me a story when you started. It wasn't always, what's the saying they use? Sunny.
Overnight success.
Overnight success was, a bit of doom and gloom like we all face. But I guess it might be good to share, how you got started and some of the, sacrifice and things that you had to go through and some of the deals that you're doing as well.
Yeah. So when I first started, I did the crazy decision. And look, everything, my wife's the backbone of me personally, to be honest. She's been the support that I've always had. And when we started the business, we had a choice. In financial planning, we had a home. I didn't really love the home we were living in, and I sort of went, I reckon I can beat the property, the growth in this property that we're living in, because I don't really love it, through businesses. So I did the crazy thing and sold the family home, bought a gym up in Queensland. My dad didn't really like that, to be honest, but put everything into that and started Code. And the first 2 years, like in broking, it's very much a delayed cash flow model. So like we sign, today we don't get paid till 60 to 90 days after settlement. So the money is there, but it's going to come so like delayed gratification. And the first 6 months probably the hardest. I remember we opened up the gym. I was in Queensland with my wife and my son, who was one at the time, and I remember we opened up the gym. Meant to be the happiest day of my life. It sort of wasn't, to be honest, because I went to Coles afterwards to go buy something and my card declined. And it was probably the most stressful time ever. And then I got an email literally 2 seconds later saying your first commission payment of $1,500 up in Queensland is going to come through on the 19th. I was like, thank God. So that's how the business started. And yeah, here we are today. We've got I own one of the gyms in a bigger group. There's 30 staff there, and there's 4, soon to be 5 in Code Finance at the moment.
Amazing.
Yeah.
So you go there, you've got no money on the card to go buy groceries, and then next thing you know, the money comes in.
Yep.
That day.
Yeah. Like I think you said to me before off camera, it was backs against the wall. You just got to fight, and there's always going to be challenges all the time in business. And then the other part to it is I actually wrote a bunch of kids books at the same time. So listeners out there and people out there, I'm dyslexic, and my teachers thought I'd never be able to write anything, and I wrote a bunch of kids books on finance to sort of bridge the gap for financial literacy for kids.
That's amazing. That's awesome.
Yeah.
And so then how do you get into commercial lending? What was the spark to go, I'm not going to go down the resi space, which you do. Of course you do that as well today. Yeah. But you specialize in the commercial. What was that reason why you wanted to go down that space?
So look, when I created the business, I sort of went, how do we most impact people? And so for people there, so we do residential, commercial, and asset finance, so all three. And with finance, for me, I sort of look at it as like raising capital in the most easiest, flexible way possible. And with residential, it's about raising capital to buy that asset. But then commercial is the same thing. Residential is very black and white, whereas commercial is very grey. I love seeing in the grey.
Why is that?
It's not. I'm not saying it's boring, but with commercial, as I've told you and the guys, like it's not. This is the property LVR. This is the property. What the value is. This is what we can borrow. No, it's not always the case. there's a tenant in there that we can sort of leverage off. There's different policies that each lender has, and that's the same with resi. But again, when I go back to commercial, it's so grey, and I love that, to be honest. I absolutely love it.
So the property that you select is probably the most important. It's not the most important part of getting the deal done. It's more the tenant.
In commercial, yeah. So, when you look at commercial, there's a massive bull run with industrial. And look, I don't mind it. I'll say I actually do love it. But then I also know there's too much sometimes in that sort of space, because commercial, there's different property types. You got your industrial, you got your large format retail, you got retail like your shop fronts, and you got office space. All those form part of, I guess, commercial. And there's obviously other property types in there. But that's one, the exciting part. And secondly, when you look at a commercial property, it's really about the tenant. If you can get the tenant with the longest first term of a lease possible, like let's say in a gym space, right? I'll tell you personally, we signed a 10-year lease flat. So to a bank, the landlord that owns that property is very secure because it's 10 years. We're not mucking around. We actually got 10 5x5. So when a bank look at that, they go, okay, this is a really good return on investment, because the bank want to get paid back. And if you don't have a tenant in there, you have to be paying it back yourself.
Really?
Yeah.
Okay. So with a first-time investor that wants to go down the commercial route, what's some things that you would give it as a piece of advice or things to look out for?
Well, take on you guys, to be honest. The guidance that you guys provide for property investors is crucial. So tick. Having a finance broker, not a mortgage broker. Mortgage broker does mortgages for homes. A finance broker does everything else and mortgages. First-time investors, there's so many different things to look at. So there's two parts of a lending application. There's equity or cash contribution, and also servicing. Can you afford it? Now, that is rental return, but then also can you afford it from a personal point of view? If you're self-employed or you got a job, what's some of the things I would probably say? Do massive amount of research, and don't just look at the area that it's going to grow. More look at, if you're going to buy a commercial property, who's the tenants that's going to be renting it out? Like, childcare is another one. Childcare is great, although banks are not so bullish on it. Like, they'll lend, you can go high with the lower tier lenders, but banks are not bagging as much as they should, because they find that the tenant, which is the childcare centre, is getting like rebates from the government. So it's government controlled, right? Kids getting put into the childcare centre, but they're also getting rebates from the government for subsidies. And then, so it's controlled by the government. So that's why the bank are not a massive fan of it.
They look at it as a risk. Basically, government changes policies,
Yeah.
that's going to affect lending.
Correct. And the other part is it's so specialised, like what else other than a childcare centre could take over that business? So that's why with industrial, when the banks are bullish on it, is because anyone can go into anyone can, to be honest, into a warehouse.
Yeah.
So it's very generalised.
Well, medical.
Yeah, medical is good. So medical, banks love it. Like, they'll go up to 100%.
Really?
Yeah.
Oh, right.
Some banks.
Some banks.
How
How many lenders on a panel for commercial?
Well, we've got 85 in total, but that includes asset finance and resi, and commercial. For commercial, God, there's so many different ones out there. And then you got, if you want to go even further, there's even private lenders as well.
But then you're paying a premium on
Correct.
interest rate, but you get the money regardless.
So, yeah, put it this way. For the tiers of lenders, you've got your top tiers, which are your major banks. Then you go second tiers. Call it, each tier that you go to, it's probably like 1% on top. 1% to 0.5% each
Yep.
tier.
Okay.
Yeah.
So when you're comparing getting a residential loan versus a commercial loan, there's a full doc application, like similar to resi. So you give them your full details, pay slips, everything like that.
Yeah.
But then there's another route that you can go down. Of course, is there a couple other routes as well that you can go down?
So there's alt doc, which is essentially you can provide, if you're self-employed, you provide 2 last BAS or an accounts declaration, and then you can get the funding that way.
Yep. And what's that, 20% deposit on a property, or it all depends?
Look, it all depends, but usually 20%.
Yep.
And again, we've go back to the asset type. the asset type is so crucial because like for a childcare, for example, they won't do 80%. They'll only do 50% or 65. You know, for industrial, they'll go 80%. So it just depends. And that's what I was saying to you before, like commercial is very grey and it challenges you all the time. That's what I love, to be honest.
So you go to a broker or finance broker and you go, it's not like, oh, what's my borrowing capacity? Here's all my slips. Doesn't work like that.
No, definitely not.
So what do? You just see if they're in a good financial position. Like, what are the things you need to look at? So then you give them the green light to go, hey, you can go look for a commercial property.
So a few things. So first we sit down and do a fact find. So understand your assets, liabilities, income and expenses. Then we'll go away and we use sort of a rate of return, like when we're doing rough servicing. Now, if any bank tells you there's a pre-approval for commercial, tell them to get stuffed. They're actually using. It's so crucial to understand, okay, what's their personal A&L? If they got business, okay, what's their financials look like? But then when you're looking at the commercial property, first got to understand what property type and give them the aspect of, okay, if it's industrial, we can go up to 80. If it's a medical and you're in the medical space, 100%. There's all that different stuff. But it'll depend on what the person's situation is and we'll use a certain rate of return for commercial, but we can't go below that. So it has to stay within that range. And usually the rate that we use from a return point of view is 5.5%.
Okay.
And only because if you're buying commercial, it's really about cash flow and the tenant.
Yep.
Because that's what gives the value is the tenant and also the lease. That's what gives the value of the actual property itself.
What if there isn't a tenant in the property? Like, is this a struggle to get finance for a property, or just
it's not a struggle, but you have to pay GST on top of that, which is 10% on top of the purchase price. If you have a lease in place, that's you don't have to pay it. It's a tough one. I sort of wouldn't buy something without a tenant.
Okay.
In commercial, that's just me personally.
Yeah.
Yeah.
Because then you got to pay the GST 10%, whatever the purchase price is. So if it's 2 mil, it's
2.2 million. Yeah. It's like 200 grand on top.
200 grand on top of, but you get that back at tax time. But
correct.
You're going to, once again, delay gratification. You got to wait whenever that is, if it's 12 months or 6 months till then.
Yeah, some lenders will fund that up front and then there'll be like some sort of balloon repayment on the fourth repayment saying to pay it back because they know you'll get it from when you do your BAS from self-employed people. Or if it's in a trust. So that's the sort of things that's why I love commercial because there's always these different ways of doing a deal.
But getting a tenant, we've had a tenant in there. Don't sometimes you think you can get that and then potentially rent it out for a higher or get someone in there after you purchase it and then the value will increase because you've got that tenant in and potentially they'll revalue that and go, oh, you know, the lease now is X amount, so it adds more value or no?
Look, yes, I agree with that. Although it's just another risk. How much risk do you want?
Yeah.
It's with anything. It's like property's like a business, as we were talking about before. If you want to take that risk, take that risk. And that is like a good way to look at it because if you get a higher lease, you're right, the value goes up, perfect. Then you use that to then buy another one.
Yeah. And then do you see many commercial properties grow in value? Because, you know, the misconception is like, oh, commercial doesn't grow. You know, it doesn't perform nowhere near as good as residential, but it's more cash flow. And that's always the selling point.
They do grow, not as aggressive as residential in some areas, but like sometimes if you buy a commercial and you get a, like you said, a cracking tenant, that lifts the overall value. So it's What's one of the other one that I've seen that grew aggressively like a resi was industrial, where a client bought it. It was just before it was complete, got it at a discounted price. I actually think, to be fair, the developer needed the funds, but bought it and then revalued it with when was it? After a tenant went in, and 6 months later, it grew by like 600 grand.
Shit,
it was huge because it was just a shell, and then the client signed a contract, and then we got it to settle once it all done and dusted. And got a tenant in there, and then that just went.
Same process of when you take equity out compared to a commercial, or is it a bit harder to get equity out? Like the LVRs are different?
Look, same but different. Like the LVRs are different according to the property type, the commercial property type. But it's the same type of process. Like even if you want to increase your lend by $1, you got to go through the same process as like a residential lend.
Yep.
Yeah.
And so when you take that equity out, will it be as high as what the rate might be in commercial?
Yeah. So in commercial, rates are usually higher, probably 0.5% higher, if I can say that.
Yep.
Onto,
Of course, depending what lender you're with, T1, T2, T3.
yeah, and then even like the
Private.
property type as well. That's what I mean. See how it's all. I love the challenge and I love how great it is.
Because then you can even go down a path where you got that lease stock loan.
Yes. Like the lower tier lenders have a interest coverage. As long as you can cover the interest, it says like 1.25 times interest, right? And for that ratio to work, it's got to pay itself, or the rent's got to pay the interest component for 1 full year plus the quarter of the next year. So people put these ratios on it, but it is simple. Your major lenders are 1.5. Now, in some areas, the banks, like the majors, will say we'll go up 65%. Sometimes, a lot of the time, the rents aren't allowing that sort of affordability. So you can only borrow up to like 55%. I've seen the highest I've seen is 60. That's the
So you
highest.
can still get the loan, but if you haven't got enough of the deposit potentially, so it works out, then you're kind of screwed.
Correct. But there's always, as I've told you guys, there's always a way. We'll figure it out.
Yeah.
Yeah. And that's why you need to see a good finance broker, because, it's all about raising capital. And if let's say from the lease stock we only get 50%, what other assets can we use equity from to then fund the rest?
Yeah.
So it's all about mix and matching different things.
Is that what majority people go down the route of when they're buying the big like $5-10 million plus commercials? Are they using lease stock, or you see a bit of mix of both?
Yeah. So the higher prices, the lease stocks, they do work, but they're backed. Like these clients that are buying those type of assets, they're backed to the nth degree. Like they've probably got a $30 million property portfolio behind them. So for this, it's like, okay. Need more cash? No, perfect.
Yeah, okay.
Yeah.
Well, interesting. So from a finance perspective, and I got to say that because you can't give property advice, but from a finance perspective, what would you rate the tier of properties to look out for, or you think would be the best that can stack up financially for an investor?
Commercial property types?
Yeah.
Ooh, that was a good one. I'm juggling between the two. Large format retail and medical. Like probably medical would be the top. Large format retail next.
Large format retail, that's like what, gyms and...
Gyms, Salvation Armies, or like a homemaker centers, yeah. Those type of assets, because they're long. The tenants are serious tenants. They've got cash flow behind them, sometimes multinationals. So medical, large format retail, industrial. See, childcare is, as much as the banks don't love them, I still do like them too. So childcare, it's from a capital perspective, and then offices.
Yeah. Offices.
One?
Yeah.
Oh, retail, and then like shopfront retail. Shopfront retail, because like especially during COVID, there's such a turnover, like retail and cafes and that type of stuff. That's sort of fallen short now.
Is that getting harder to get finance for the office space? Or is retail, the shopfront retail's getting...
They're both similar.
Both similar?
Yeah,
really?
yeah, both similar. But to be fair, like we can always make it work.
Yeah. What would be a standard LVR on those, I guess, on that category there that you've given us?
So some of the majors will say they can go up to 65%, but then their interest coverage jumps up significantly. So it's like they say that it can go up to this, but their servicing calculations and how they do it is so high that you literally need to make like so much money behind you to be able to service a loan.
Yeah.
So that ICL, their interest coverage goes up to like 2.25% rather than 1.5.
Okay.
So it's all a metric system that they have.
Yeah. Is there a kind of a point where you see your clients that come in and they purchase, deals, whatever it may be, at different price points? Do you feel like there's like you want to be looking at a certain price point above, like over $1 million or over $2 million or anything under $1 million? It doesn't really stack up. It's like you're better off sticking in resi. Like,
so sub $1 million, like under $1 million, there's a deal that we know of that was the rate of return was so high. I was like, never seen that before. The ones I see that probably where the rental returns are quite high, higher, 1.2 to 1.5 and up sort of thing. That's where you start seeing a return on investment quite good. Like you're looking at your rental yields by 6.5%, 7% and higher.
Yeah. So anything over really 6 is a good rental yield for commercial, you reckon?
Yeah, I'd say so. Because you look at it from a rates point of view, the rates on a commercial property could be anywhere from 6 to 8%, depending on the tier of lender. So be very careful when I say that. And like if you're getting, 6.5% rental yield, perfect. Like you've sort of made your money back.
Yeah. But when you go on for the bigger stuff, like you're saying, like the format retail or medical or stuff like that, the yields are probably a little bit lower, but you got that longer lease
Correct.
locked in.
Yeah, like I've gone to some of these auctions and you see them, you see like the Maccas or like KFCs being sold, and you sort of look at it, the people that are buying them must be cashed up, and they actually are, because their return on investment is like 3%, but you're buying like a Macca's. So like you sort of look at that and you go, why are they buying it? Like, 20-year leases or whatever it is. Like I remember there was a big push for banks. We'll sort of tell our clients don't buy banks because they're getting out of the retail shop front and they're going digital. And luckily, because they got out of their leases.
Yeah. Yeah. Okay. So when you're looking at, I guess, a client going for a property, is there any clauses that you say, okay, this is kind of like a broad range of clauses or a must have for clauses, and then there's, if you need anything to protect themselves?
Finance clause, definitely.
Yep.
Inspection, property inspection, same as resi. Like there's not much difference with that type of stuff. The get out clause is those two, because if finance doesn't go through, the only thing is if you put it through, here's the other part, right? What people don't say. If you want to put that finance clause and you don't want to proceed with it, you have to show the vendor a declinal letter or their solicitor decline, which is true. You have to do that because you have to show truthfully, is this really a decline? So you don't want to get a decline, and there's always a way of getting finance across the line, but be careful when you're putting that finance clause in place.
Yep. Yeah. Have you ever seen it? Majority of the deals that you're doing, are you seeing a lot of them that don't go through when it comes to commercial? It's pretty...
No, we get them through.
Yeah.
There's always a way. Like having the lender panel that every broker has, there's always an option. Always.
Yeah.
Always an option, as I told you guys.
Yeah.
Yeah.
It's all... so which out of the big banks, do they all do commercial lending? Like Combank, all of them?
Yeah, like
ANZ?
Macquarie is the only one that they do, but they're not really great for. They only have their professional services. Macquarie know exactly what they know and do well, like their resi channel. That's it. The rest, they do it.
Yeah.
They definitely do.
Okay. And a lot of these clients of yours, you say, are they everyone purchasing through a company or a trust, or are they doing stuff individual? There's a bit of a mix and match.
There's a mix and match of it all.
Yeah.
Like a lot of it, because we're not advisors. Like I used to be a financial advisor, but I cancelled that license. They'll go to their accountants. They'll speak to people like yourselves and get the advice they need from a structural point of view.
And there's no difference with the lending side of things when it's in a different entity besides your trust versus personal name?
Sometimes there is. Sometimes there might be. So I know there's a big push about buying things in trust, which is fine. If you're like a business owner and you're buying, let's say, the place that you're operating out of, you can do a structure where you put that in a trust and it's an asset entity, and then you have your trading company. That's fine. Obviously, speak to your accountant about it. For investors, I'd definitely go back to the accountant and actually go, okay, which structure is best from a finance point of view? Like I said, we'll be able to work it out.
Yep.
Yeah.
It won't matter too much. There'll be some sort of solution.
There's always a solution, yeah. Like there's some restrictions in trust sometimes, but that doesn't mean there's a restriction doesn't mean it can't be done.
Yep. Okay.
I find people they throw out the term, don't put it in trust, it might be too hard to do, or don't do any personal name because it might be too hard. No, it's not.
Yeah.
It's about raising capital. How do we provide the bank or the lenders what we need to get this finance across the line? That's what we see it.
Okay. What about SMSF? This starts to become a bit more grey again when it comes to commercial lending?
It's actually easier.
Really?
Yeah, like from a servicing point of view, you got your contributions, you got your rent. That's it. Like it's not too hard. Like I know some other brokers that don't like touching because they don't know or they don't like that side of things. That's okay. Like we love it. It's just, again, when we look at clients as a whole and in a situation, we're there to help them, guide them through the finance side of things, but provide a solution to them, whatever it is. Like, and probably the beauty that we have in our business is I used to be a self-managed super fund specialist for 5 years as a planner. So I'm seeing more commercial being purchased through self-managed super funds rather than resi.
Yeah. Yep. And I guess it all comes down to timing too for some of the people that are doing that. We look as they're quite young. It's like don't go too early into commercial. Like let's build our resi portfolio and you self-manage and then sell that off because you only have to pay 10% tax on the profits and then, go straight into commercial from there. So,
well, it's the same strategy just because it's super. Like you look at a client's wealth and from you guys, like you look at a client's circumstance, go, how do we build wealth through property, whether it's the SMSF or personal through trust? An SMSF is just a trust. That's all it is, to be honest.
Yeah.
Just how do you build wealth in the most effective way possible?
Yep. What's the greatest return you've seen on a commercial deal from a rental yield?
9.5%.
9.5%
return. Rental return.
Yeah.
Yep.
Because everything's net. Because all your outgoings are paid by your tenant. So it's yeah.
When I saw it, I was like, "You'd be stupid not to purchase this."
Yeah. Do you find when you start to see assets, like for example, a client sent me an asset. It was a retail, 3 leases, shop front, and it had like a hair salon. Had a yogurt, yogurt thing, Yochi, whatever it is, and something else.
Yeah.
Had a yield of 6.7%. I was like, geez, this is pretty cool. But then I started looking at the leases, and some of them 1 year, some's like got 4 or 5 years, another one's got like 2 years.
Yeah.
Do you normally generally see that with retail shop fronts because you get a greater return, but then the risk is higher? Is that normally, do you see that with commercial a lot as well?
Yeah. So sometimes like with that shop front, because the terms are so short, like the lease might be only 2 years or 3 years. We do see that a lot. Yep. Yeah. So the return might be great, but then again, back to why we're buying commercial is to get a secure, because when you look commercial, you look at the property itself, but then you also look at the lease, and that's what's really holding up the asset from a valuation point of view. So, yeah, 100%. Like,
and then they've probably had them on the market for maybe 6-7 months. No, they can't get anyone in there. They lower the price, the yield goes up. Yeah, gets more attractive.
Yeah.
So it's probably something for people, if they're listening, to watch out on that. Because that probably happens a lot, really.
It does.
Commercial. Yeah.
Yeah, it does. Because like when you have multi leases in place, in a perfect world, you'd try to line them all up to all be, similar because you can negotiate them all, although it's tough. And you want to try to get the longest term possible because banks, what they'll do is they'll provide you, whether it's P9 interest only, up to the first term of lease, up to renewal, and then it'll go, again, just a flick of a switch.
Yep.
So you want to make sure you secure a tenant longest first term possible.
You ever had any horror stories where they've purchased a property and something's gone wrong because the lease maybe wasn't drawn up correctly, or maybe solicited in, look over the contract properly?
Yeah, I mean, look, we had a client that bought a property, and my biggest thing for them was they only had another 6 months on the lease with another option of 5 years. Oh, no, it was 7 years. Yeah, it was 7 by 7. And they only had that first option that was sort of coming really close. We can't advise. All I said is, start that conversation before buying it with the tenant and the vendor and everything like that. So get it sort of now. The tenant actually left, and that property, it got tenanted, but that was a good, I'm going to say almost 12 months of hell for them.
To find a tenant.
Yeah.
Yeah.
Yeah. Because then like they're paying it out, and we said to them, like, this is something you need to make sure you do your DD before buying this. And we actually said, don't do it.
Yeah.
We said, look at another property. Yeah. Okay. The yield was quite good, but again, there was only 6 months left on the first term. And I said, it's a bit tough. So.
Yeah. So you once again, tenant's the most important thing.
Yeah.
Yeah.
What's like resi?
Yeah, I know someone's bought an industrial warehouse and had no tenant in, but they got the guarantee 12 months rent from the developer. 1 year's gone by, they can't get a tenant in. Now they're trying to sell the property.
And that's the thing. Guarantees are not always great, because when you have a guarantee, just why are they doing a guarantee? Like, you just sort of think of it and you go through with it, and sometimes it can work, but there's a risk in everything.
Yeah, especially when you got this small little warehousing getting popped up everywhere. And if you're looking at the supply versus demand, if there's too many of them getting popped, like...
Why? Yeah. It's like, look, it's like Epping, right? Northern suburbs of Melbourne, and Epping's a great location, and they're probably, like, the industrial market has gone through the roof, sort of plateau at the moment because they just keep building more and more behind them. So as a tenant, like, let's say if me and you want to open up an office open up one of those warehouses and take on the lease, why would we get an older one? Why not go, maybe 300 metres down the road where a new development's come up and potentially go into that property?
Yeah.
So it's, the generalized properties are great, but you got to make sure, like you guys do awesome work with making sure that the demand and supply is not, mixed up.
Yeah. There's so many things you got to check with commercial. It's not the hardest thing is there's no data when it comes to actually looking at this. So like you go resi, you can find how many listings, how many days on market. You look at the average amount of sales and all that sort of jazz. But with commercial, you can't. So it becomes even more hard to have understanding the market itself and then understanding what type of assets are high demand. So your PM, you got to lean on your PMs, you got to lean on the leasing agents and all that sort of stuff. Yeah,
and they're hard people to get in contact with sometimes.
Yeah, hard. Or even if they're good at what they do, that's even a struggle as well. So
it is hard. It's not easy. That's why I was very back to the point of saying what sort of assets I like is the large format retail because it's in a populated area, and like if those properties are near like a I don't know, a shopping center or something, that means there's population growth and employment and all that. So
curiosity, how long does it take to get the paperwork involved doing a commercial loan versus resi? What is it much more involved?
Look, with me and the team, like I'm very ruthless. I'll make sure that if you give us everything, we've got a 5-day turnaround time max. If it's gone over 5 days, we haven't done our job properly. So we do everything for you. So we'll have the initial meeting, fill out all the details that we need, and then we'll go away, do our research, pre-fill everything, send it out to you. So like resi for us, our turnarounds are 3 days. For commercial, probably say 5. Sometimes even a lot less, but that's our deadline.
Yep.
I stick to those all the time.
Yep. Okay. Interesting.
Yeah.
So if you're an investor, someone that wants a piece of advice when it comes to financing.
Yeah.
What would you say your top 3 things are to give them the best advice so when they go out there they can execute and they line up all their ducks?
Speak to a good finance broker sooner rather than later. Even if you're not ready to buy.
So when you say finance, not a mortgage broker, a finance broker that specialises in commercial.
Yeah, or like finance broker, when they have the term finance broker, geez, I shouldn't generalise, but usually it means they do commercial, yes, they do residential, yes, they do asset finance. They might specialise, but speak to them. Brokers are pretty good with just chatting. Like if you want to call one of them and find out a bit more, look online, see what they're doing, go for it, even have a chat to them. So speak to an expert, have a good accountant, make sure definitely have a good accountant, and then have a good buyer's agent like you guys.
Yep.
They're probably the 3 because when you have the good support of all the 3 specialties, then sky's the limit.
Yeah, awesome. And you're looking for workers.
Yes.
So if there's anyone listening, they need they want to get into finance.
Yeah, yes.
Come speak to Code Finance.
100%.
All right. Well, thanks, Anth, for jumping on. And if you did get value from this episode, please like or share because it just means that we're reaching more people, and then it gives us an understanding that people are liking these type of episodes, and we'll do more of it. So thank you again, guys, and thanks for coming in.
Appreciate it.